Hey everyone, welcome back to Corporate Decoder. Are you ready to dive into the thrilling world of utility company finances? Today we're cracking open Portland General Electric's latest report. It's like trying to figure out why your power bill is so high, but with more numbers. First things first, this report is as of April 25, 2025. That's the day Portland General Electric, or PGE, told the Securities and Exchange Commission, the SEC, about some important stuff. Think of the SEC as the financial police, making sure companies play fair. This report is called an 8K, which is like a quick update a company gives when something important happens. Portland General Electric, that's the company we're looking at. They're based in Oregon and their main job is to keep the lights on for people in their area. They're a pretty big deal in the Pacific Northwest. Now let's skip some of the legal checkboxes. These just say that PGE is following the rules and isn't trying to hide anything. It's like saying, we swear we're telling the truth. Here's where things get interesting. Item 2.02 is all about how the company is doing financially. It's like checking your bank account to see if you can afford that new gadget. PGE released a press release about their financial results for the first 3 months of 2025. That press release is attached to this report so we can see exactly how they did. It's like reading the headline news about the company. Next up is item 701, which is about Regulation FD. This is another rule that says companies have to share important information with everyone at the same time. It's like making sure everyone gets the same memo. PGE had a conference call to talk about their earnings, which is basically how much money they made. They even had a slideshow to go along with it. That slideshow is also attached to this report. Item 9101 is just a list of all the extra stuff that's included with the report, like the press release and the slideshow. It's like the appendix of a book. Now let's dive into the good stuff, the financial results. We can see the press release that was issued by Portland General Electric. This document gives us a summary of how the company performed in the first quarter of 2025. Next, we have the slides used in the earnings call. These slides should give a nice visual of how the company is doing. We're going to focus on what those slides have to say about the financials. Now we are going to go straight to the financial data contained in the investor presentation. Let's find out about the money. First up, let's look at the earnings performance. Earnings are how much money a company makes after paying all its bills. It looks like there's an asterisk next to the numbers. Companies use asterisks to tell you to read the fine print at the bottom. This usually means there are some special situations that affected the numbers. Okay, let's talk about the actual numbers for the first quarter. Total revenues came in at $828 million. Compared to last year, it was $769 million. So they made about $60 million more dollars than the year before. Not bad. Net income, which is the profit after all expenses, was $74 million. Last year, it was $58 million, so their profits are up by $16 million. These are big jumps, so let's see what's driving them. Now, let's see where the revenue came from. Looks like residential sales were up, meaning people used more electricity at home. Commercial sales also increased, and industrial sales were up too. So basically, everyone used more power. Let's see if they made more money because of rates, or because people used more here. The average retail prices seem relatively stable, not much change. This reinforces the idea that people consuming more is what drove revenue increase. Alright, so the company made more money, but what did they spend it on? Capital expenditures are long-term assets purchased to help the business grow. Let's take a look at the table here. It looks like it increased from 66 to 19.7 million. Utility companies usually require a lot of investments to maintain and grow. Debt to capitalization. This is how much the company owes versus how much it owns. It's a health metric for a company. If it increases, it could mean they took loans to finance things, which is dangerous. According to the report, the number is virtually the same, which means the company is on a stable footing and not taking on a dangerous level of debt. So what's the big picture here? PGE had a good first quarter. They made more money, their profits were up, and people used more electricity. They also spent more on long-term assets like new equipment or power plants. The debt to capitalization is healthy and stable. The company seems to be doing well, but let's dig a little deeper. Are there any risks or opportunities that we should be aware of? Looking at these results, PGE appears to be a stable company in a regulated industry. However, that stability comes with some trade-offs. They don't have the high growth potential of a tech company, but they also don't face the same level of competition or risk. One potential risk is the increasing focus on renewable energy. While PGE is investing in renewable energy sources, they also rely heavily on fossil fuels like coal and natural gas. If the cost of renewable energy continues to fall, or if government regulations become more strict, PGE could be forced to retire their fossil fuel plants early, which would be expensive. On the other hand, PGE has a lot of opportunities. The population in their service area is growing, which means more customers and more demand for electricity. They're also investing in new technologies like smart grids and electric vehicle charging stations, which could help them grow their business and become more efficient. Overall, PGE seems to be a well-managed company with a bright future. They're facing some challenges, but they also have a lot of opportunities. I'd say they're a solid investment for someone who's looking for a stable, long-term return. But as with any investment, it's important to do your own research and understand the risks before you put your money in. Thanks for watching. If you enjoyed this video, please like, comment and subscribe for more corporate decoder deep dives. Let me know in the comments which company you want me to analyze next.